Hello, I'm back. Part 2. Can somebody tell me where this cut off? I did not have a chance to go back to the old YouTube and check it out. Thank you, Waka Waka. Oh boy. Could somebody just let me know where it stopped? Where it stopped. I know we were looking at. Remember, we also, from the Elliott perspective. Sorry, I don't know what happened. It looks like the primary internet dropped for a second. Comcast doing work in the neighborhood. So if anybody can type in who's jumping back on where we cut out, just so I know. All right. Stopped at Formula One results. Yes, nobody put them in. I was looking at volume. Did it cut out during volume? I finished my volume thing. One second. So I finished the volume. We do have an inverse head and shoulders, albeit sloppy. We do have daily cycles at the top. Watching for the volume just finished or the Formula One race just finished? By the way, this 5-wave decline was finished and triggered from an Elliott standpoint. It was triggered back on Monday, was official trigger for Elliott standpoint and reconfirmed with this pullback and the move up on Friday. Cycles at the top on the daily. At the bottom and turning up on the weekly, I am watching for a potential pause right here and holding 36.75 key support for the macro daily. So any pullback still here keeps it in support. We start getting a daily close below 36.75 area, 36.70. That gets interesting from the bullish perspective. Now, if this moves sideways or even edges up and then pauses and cycles get back to the bottom on the daily, then we can start watching really for the power move up. Why the power move up? We'd have daily cycles at the bottom, weekly cycles still moving up. That really is what I need. When we have mismatched cycles, it makes it a little more challenging. Now, defining point on this neckline is a high of 37.7725. If you want to know what a defining point is, I do a bunch on trend lines on the channel. That's what's key. Watching for a close above that. Here are your targets: 39.42, 40.15, 40.89. Nearly takes it back to the 200-day. Let's take a look at the most recent bigger swings now on this down move. Since, remember, we start here. We got the close above the 62.5. You target the 87.5 to 100, which has been hit. Not officially yet. We still have a little group to go on that 87.5. We'll probably hit it with the overnight session. The next key area, harmonic area of 38.38 to about 38.47. Minor will be the 50-day, so we could see an intraday pause or even a daily high there around 38.25. But once we start getting a push through about 38.43, 38.45, then I'm watching for this 39.20 to 39.42 area. 39.20, why? It's the next 62.5. We get the close above there. Fascinating enough, the next target, the 75%, and the second target for the head and shoulders, virtually in the same. And the next target above that, the 87.5, is virtually the final target with the head and shoulders. So we have some nice clusters overhead for target areas. That's what is key to the upside. Now, this little low back from Friday is going to be very interesting. We have to see. And it's a little big swing in here, but it technically does qualify. Remember, analyze both sides. Do not just take anything for granted. And after that triggers, the 62.5 is right there before the first target. So you get a close on that 4-hour to daily below that 62.5. This would tip me back for a retest of the low area. That's the only bearish sign I have at this point. That's it. And that could disappear with a continued rally tomorrow. It would be a strong rally, but that is the only bearish thing I have at this point, besides cycles being at the top. But remember, we could just go into choppy with a pullback. So 36.41 is the key on a closing basis for at least a 4-hour time period. 2 likes for the price of 1. Thanks, P-Dub. Well, Comcast is never good. It's why I rely on a backup. From releasing earnings this week, T-Mobile. I'm watching Mike talk in Japanese to English dubbed movie. Fantastic. All right, so that's it for the S&P. For the NAS, again, you have another very sloppy. I'm peeling off a bunch of this stuff to simplify, trying to give a little broader perspective on a Sunday. 11,061, first area on the closing basis. I don't know if this one qualifies still. It's horribly sloppy, and no, it does not. So it would just be the same key close from Friday's lows, but we could not use it as a double top. So the only bearish thing is from Friday's lows, and then the next bearish thing would be 10,840. The close below there would then favor a return to the lows. Other than that, there's not much bearish on the chart. Same thing, cycles at the top, not as close to a rollover as the S&P. Closing above the daily rotation zone after, see, this is why we follow it. Hitting the 8, rotation, closing in it, closing down, closing down, closing down, finally close above it. So guess what the next logical target on the next rally is? The weekly rotation zone, especially that area right there, 12,104. Shorter term basis, we'll map out this. I'm almost going to call it a Mr. Yuck. Because the shoulders aren't great. But let's just see how the levels fit. Yeah, nice target area there. Nice target area there. What else do we have? 62.5 right in front of there. So I've got a game plan sort of mapped out. I am not ignoring, though, this 50% of this last decline. No, it's not the major decline. This would be the major decline. I'm still watching this one. 50% with the 50. The 50-50. We got a 50-50 and key resistance from October 6th. That's my next major target. 11,760, 11,750 area. 11,874. Dyslexia kicked in. For stop reduction of the head and shoulders. Key target area, 62.5. Head and shoulders target and breakdown area. Breakdown area came from the weekly breakdown area. Prior resistance becoming support, broken, tested as resistance, back to resistance, and the top of the weekly rotation zone. So I got some great targets coming up here. That would be a next major target. You get a close above that. The minor target is a 75% harmonic with the final target from the head and shoulders. And then the 87.5% harmonic, 12701. So I got it all mapped out. Easy peasy markets. Should give you grounds for a pause. So unless we trigger something bearish, still got to stay on the bullish upside potentiality. Volume also still kicking in from the NAS. See, you're starting to get higher up volume days than down volume days. So keep an eye on that, confirmed with the NAS. The Dow, nearly first target hit. When it gets this close on a Friday, first target's hit, raise the stop. The stop on the double is now 29,596. Dow also higher than the Wednesday, the 5th highs. So now we've made higher low, slightly, higher high. A reversal in lower highs and lower lows. And the double triggered back on the 18th. First target virtually hit 31,607, 31,980. Using the retracements. The key area, it's almost there. Almost there on a closing basis tomorrow. 31,231. Then overall would be 32,270. Key support. Minor support going in overhead is 30,925 area. Next key support area though, 30,365. No potential double top. I would be watching though Friday's low. Other than that, any pullback does not tip us to bearish mode yet. Cycle's at the top. Cycle's still heading up. Now this is getting closer to the other side of the rotation zone on the weekly, but we still have room to run. So a pause, even a pullback, it takes a lot more to tip it into bearish mode. All right. You refreshed in the page and now all good. Well, we don't want Mike talking Japanese with English dub movie. So thank you for letting me know. Thank you, Waka Waka. Total personal savings dropped from 6.5 trillion to 650 billion. That's a big drop. Oh, I think the credit card companies are still ramping up. I'm just going to watch for longer term if charge-offs are starting to climb. Sorry. With the can't see the Perrier bottle. Hey, Perrier will take a paid sponsorship for Perrier. Hey, happy Sunday, Connor. Can you touch on the 2 points for your trend line on the low? Which you got to type in the market. Remember, please type in the market you are talking about. And put a question mark. Okay? Question mark starts the statement, so I know it's a question mark because we're getting so many more comments here, I can't get to all of them. The nature of being popular. Just kidding. So let me know. Oh, the Dow? The Dow. The trend line from the lows. I don't have a... What, are you talking this trend line? I don't have another trend line. That's a properly drawn trend line. And this, it's technically initiating defining point. And that is completely valid. This is a valid trend line. Also, by the way, for the Dow, we're almost closing into a single candle clear path. So on a continued move, we could theoretically get to 32,341 again. Russell confirmed double, but not yet triggered. Russell really lagging this. still in major consolidation. So the Russell's my last go-to bull play at the moment. Laggard. Keeping though still an eye at 1700 on a closing basis if we pull back in the Russell. The double would trigger at 1782.50, just above the 50-day. So that's what I'm watching at the Russell. Nothing much other than that. The DAX, which triggered the double, got a nice little pullback, rising rotation zone, no stop reduction. That's why these things don't show up to here. So on a pullback level, yes, but from a stop moving, officially can't move the stop yet on that double. Targets are still 13,076, 13,254, 13,431 is the last minor one because it cuts into a wick. So really focusing on the first and second targets on this. The only ground for pause would be a daily close back below 12,255. Notes, little reversal on Friday after the Timoros article. Anything to the upside slams in the rotation zone in the prior resistance, so it would just be scalpy plays up to about 110.19, 110.20. Other than that, nothing. Nothing. Gonna watch from a resumption of the downtrend if we get a pullback in here to see if this 50 or 62.5 holds. If we get a pause up here, then that could confirm a little breakout play into this clear path move for a return to that one. I'd actually bump it down to about 116 to 120 area. That's the little stuff I'll be watching for in the notes. Dollar index will be interesting. Remember, we had the Japanese intervention, the bearish. This was the Japanese intervention. Gonna keep an eye on this little mini double. That's the only thing that would make me short-term bullish. Why? Because we had a pretty decent pullback. So that would be at least a 1 hour close above 112.11. Targets 112.45, 112.61, 112.78. The bearish, that has not confirmed or triggered yet. The bearish play. Just clean up the chart a bit. Again, could not hit that 87.5 so far, but if we start breaking below this 111.62, I'm watching for that pullback to 110.50. You're into a clear path move right below these key closes. And it would be confirmed with a break of Friday's lows, which was also similar to Tuesday the 18th lows. You break below there, could be a pretty quick rush back down to about 110.50 and the 50. We're getting a lot of 50-50s. Also, this still does qualify as a potential double. Could we see a much bigger reversal in the dollar? That's yet to be seen. By the way, you get a bigger reversal in the dollar, that is bullish for the markets, would support the bullish case. So I will be watching that. And this is a clear example why I hate triangles. Break above the triangle, could not get above the highs from the 13th or even running into key resistance based off the candle closes, 113.20, slammed, and then reversing the side and still catching on this key defining point. That's why I hate triangles. Triangles test out just better than 50. It's actually 51 to 52 to 48 to 49. There is not a huge advantage. I put it on the charts because people like to see triangles. They're not strong tradable patterns. Oh, fantastic. Finding love on the best dating site. Thank you for attending. Boy, if anybody's looking for love on this channel for technical analysis, let's look for love and tune in for a technical analysis channel. Bots have to be smarter. Could I go over tape reading for options? I don't really do a lot of tape reading for options besides for order placement, like for when to cut the bid offer. All right, let's say I'm trying to work an order and I can see some back and forth price action. I'm looking to split the bid offer or bid ask to work an order. That's about the extent of the tape reading. Or is there a lot of pressure going in the direction I'm trying to get the tape, and I gotta hit the off, lift the offer or hit the bid, because you technically lift the offer or you hit the bid. That's about the extent of the tape reading I do on options. It's just to fine tune orders. The tape reading on the underlying is much more important. So the tape reading on the futures or on the stock is much more important than tape reading on options. Just like if you're going to use stops, do not use stops on options. Use stops on the underlying. That's what technically invalidates your trade. Or targets on the underlying. You don't use targets based off of options. So people that talk about, oh, my option, I'm using a 25% stop loss in the option. That's an asinine thing. VIX, just keeping an eye on this overall daily double. The daily double, because that would also trigger below the 50. And that daily double is technically a weekly double. That would support the bull case. We're not there yet, so you know the key area I will be watching. Crude. No double. I'm just sitting on hands to watch overnight price action based off of this. Sort of in consolidation. Now, we did close below the 62.5, so I'd have to lean to the short-term bearish side. But there's no great trigger or play here yet. So sometimes markets are sitting on the hands. That's a sitting on the hands. Remember, Natty Gas finished the double. Broken down. I'm watching for a slight bounce and then a rollover play. But your next key support, the next target area is 466. Key resistance now coming in back at 542. I still remember how many people said that double would never hit, and you don't know. Probabilities, you got to trade probabilities. But I remember how people said that was insane. Natty Gas is not going to go back down to the July lows. Now we're even beyond the July lows. That's why you don't know. And if you have some greater insight, let me know. I will, if it tests out, you can have all the credit in the world. I put in gold. I talked about the sector overview. I'm going to make you tune into that to hear my thoughts on especially gold miners. Okay. Is this a big bull reversal? No. Key area now is the 1673. What else? The yen from the Gentervention. We'll call it the Gentervention. Japanese yen intervention. I am keeping an eye with my eagle eyes. With my surgically implanted lens on my right eye. Eagle eye right there. This high, 148.46. Close above there favors a pretty substantial retrace of the Japanese intervention. That's what I'm watching. Coming back down, couldn't even get back down to the key major support. Remember, they intervened Japan when all the traders are off the F, and even European. Everybody's at a bar. Or a lot of the European traders were heading to the bar. But the Japanese traders were 9 sheets to the wind by the time they started intervening. So, Euro. It's really above here. I'm just targeting 99.41. Minor will be this 99 area with the declining 50. Yes, we still have this bigger double in play. And yes, this was a horrible triangle thing that was not tradable. Other than that, we have some major work to do now for any bearish breakdown in the euro. Who's going to get to be prime minister? Who? So, so that's where we sit there. Yuck. Pound. Still have a put. It's going to turn into, it's a pretty much a triple. Yuck. Pound. Key. I'm just watching this 115 area. And then we get above that, I'll start doing the bigger retracements. Especially the next target would be 118.20. Bitcoin. The coin of bit. Nothing. I mean, I went over this. When was that? Friday. Key support 18.5. Key resistance 25. In there, nothing to do from my perspective until either the breakdown or the breakout. If the markets stay in short-term bullish mode, favoring the breakout within the bigger consolidation pattern. Can I do technical analysis on Astros winning today? Well, no. Can you show me a chart? Actually, that's sort of because of, you know how much stuff has been. I mean, that was highlighted by Oakland A's and back in the day with, hey, let's analyze everybody's stats. That's essentially what technical analysis is. So technical analysis has already been done from baseball perspective. And I know there's a lot of very strong gamblers who do some very strong stats. It's not my area. So no, I'm sorry, I cannot do that. Yes, the triangle is very similar to a red-black on a roulette wheel. That's why I put them on the charts, but you don't trade triangle patterns. And if you go to another channel and they're stressing triangle patterns and probabilities, they have not tested it out, I guarantee. Because if they had tested it out, it's too gosh darn close to 50-50. Now, at least ascending and descending triangles in the direction of the trend favors a trend continuation, but that's more of a trend continuation play. It's not a triangle play. Is there a hidden... Oh, I hate hidden divergences. There's just a regular divergence. Now, hidden bearish divergence, hidden divergences, I've tested those. Those don't trade very well. Regular divergences are much stronger trade than hidden. By the way, has the 10Q dropped for Tesla? I don't think so, unless I missed it. Because I don't think from a technical standpoint, Elon can start selling till after the 10Q drops. I might be wrong on that. That's why I was watching for the 10Q drop. This is technically a double bottom pattern. By the way, and off Friday's close. Here's your 62.5 for the gap fill harmonics, and look at that. Right in front of it. So going into tomorrow, that's your key stuff for the gap fill. 214.80. For people wondering why this weird starting point on the harmonic, that's the research I've done on gap fill harmonics. This 214.80 on a key closing basis is what I'm watching for the gap fill harmonics. Yes, you do have a bigger double in play on a daily close back above, at least a 4-hour close or daily close back above 229.82 is lower probability since it is going against the daily. and weekly rotation zones. That's about it on Tesla. Isn't it till the 28th that the court gave them? So this is the week to close the Twitter. To close the Twitter. We shall see. By the way, do keep an eye also with that gap fill on the Ford, which is essentially taking it to the other side of the 4-hour rotation zone. Let's see if there's anything else. I think Microsoft could beat earnings. But then what's the play? Again, we've hit the first and second targets. Now remember, you can get a substantial bounce, but the first and second targets have been hit from the major topping pattern. That would be a horrible. You're getting all these horrible inverse head and shoulders. I mean, it's going to take a lot to get super bullish. The only thing I'm really watching for is if you do get a pop in the old Microsoft. The key area I'm keeping an eye on is about 249. Why 249? You got some pretty decent significance right around 249. You've got a confirmed resistance area. You got the declining 50. Above there, we have some gaps left behind. So that's the key thing I'm watching for, especially if the market makes a run and tech gets strong. And I don't want to go into Microsoft. There's no great play here. Going into earnings, remember, Tuesday afternoon, I would rather wait, and even if it gets a gap up, you can play a potential little breakaway gap. You got an earnings, a little gap fill here, a major gap fill here. Fascinating enough, I'd be using 256.34 as a first target. Second target, not only do you have a gap fill, you have the 62.5 virtually at the gap open price, not the gap close price. And then even above there, you got the declining 200. So if the market makes a major run fueled by tech, Microsoft could be a play post-earnings. I don't need to get into something here when the probabilities will shift above 249, even 250, if you want to be a little more patient. Okay? So I don't need to take the unknown going into earnings. Even on a gap, fine. I can take a play above, then that resistance would become support, and then there's still room to run. So there are too many people want to try to, should I go into this? Well, I don't have a great signal. So from my perspective, there's no great signal just here. With cycles at the top going into earnings on Tuesday, when they could beat, but if it's not strong enough a beat, and then they do something with guidance and they're like, guidance is what are they going to do? Is it a gap up or a gap down? Don't know. I don't need to call this being a low even if it goes up. I will wait till I get more confirmation and then take the chunk out of the middle. Remember, chunk out of the middle. Why even here? What would be interesting? Let's say it gap back down and then we started to get a really substantial rally going. Well, then we'd have a potential double that I could play. There's no front run here. So earnings will be interesting, but this would be gambling for me. Because even on a beat, I don't know how the market's going to react. Need a big negative global macro news event to wash this out? Well, yeah, if we haven't had a capitulation. I'm seeing so many garbage articles now. We've had a sort of a capitulation. We did not even have anywhere close to capitulation. This is just a technical bounce so far, going into a regular period of the year this quarter. I agree with P Dubs that do you want P Dub or P? If I call you P Dubs, is that like wrong, P Dub? Uh yeah, we have not got. If we did get something major to flush this out, that would be more of a medium term capitulation bottom, which is a way easier trade. Or we get Russia Ukraine ending, which I really don't see. And I think we're going to get the heat up sooner rather than later, especially with Z getting control of China for a third term. I think the move on Taiwan is going to now be a lot sooner, which is going to get interesting from a supply chain perspective again. Who's that? Oh, wait. Who's having Lou Malnati's? I missed it. Who's having which? What kind? If you're having Lou Malnati's tonight, oh, here we go. Mike's probably got one around the corner down the road, so the best I can get is next day on dry ice to my oven. Still not bad. Yes, I have 2 locations within 8 minutes of me. 2 locations. So you could probably zero in on. I'll give you the 2 locations so you can figure out the vicinity on where I live. Actually, I got even more than that. I got one, but the 2 closest are Northbrook and Wilmette. Then it would be Highland Park. Wilmette's technically the closest, and I live north of Wilmette. Jake, what kind of Lou Malnati's are you having, Jake? Thoughts on the SPY moving in basic symmetry with the SPY in 2008? Gonna make me work for it? Oh. All right, we'll go back the way. I'm gonna have to look at the weeklies. Look at all this in the way back. There's a faster way to do it, I know. I mean, could it? Sure. You didn't get much of a bounce going into the year end in 2008. I remember this very well. Boy, do I remember October 2008. Whew. I remember this right here. This week. I can even remember phone calls I was on from this week. So yeah, could it repeat? Sure. But I remember here there was very little bullish. Very little. Unlike this. This I have to give a little more of the, oh, what's that? Did I have it on Microsoft? But it doesn't matter. It was the market anyways. Hold on. Before I do a Mr. Bungles, I remember that. Oh, what? Oh, there we go. I remember that. Right. There's this week. I remember. Yeah, I had it on Microsoft this week. Right here. This was the bloodbath. No bounce into December. I mean, this little thing. This was a single week. This was a little move, but no substantial bounce. So that'll be it. Could we get a replay? The interesting thing was we were already in a major recession at this point. I do not think we're in a major recession yet. That's the difference between now and 2008. I think we're still headed for a much more significant recession. Sorry for pulling out the wrong chart there. So if we did roll down, if I had to make a guess, and this is about as much as it's worth, a guess, I think we're going to have some substantial rally, especially in November. Especially in November, I think we could peter out before year's end, especially if there's bad Black Friday, Cyber Monday data coming out. If the consumer starts tapping out a little more aggressively, we could see a rally that peters out before year end. Now, is that tradable? No, I got to trade a pattern. Also remember, so far on the weekly, the 200 has held. The 200 has held. So this 3,600 area has now been validated for 1, 2, 3, 4 weeks. When this breaks, and I'm not saying if, I'm saying when this breaks, then we'll see some downside action. All right. Netflix. Nothing's changed since I covered it on Friday. I spent some time on this on Friday. Even on a pullback, it is key now support. Unless you start getting a close into this key support, it's got to stay. Yeah, I think we could get a pullback with cycles at the top, but in the short term, where it's now above the 200-day, this is also support, this little ledge here. So unless we really start breaking these two key support points, 280 and then 265, and both those would only lead it back to a partial gap fill and this third level of support. So from my perspective, there aren't any great bearish plays right now, unless they're intraday plays on a potential partial gap fill. To me, it would be using a key bullish reversal either off this 280 level if we get a pullback there, or this 265 level with the rising rotation zone. The targets, well, this minor target, it could even be hit tomorrow, 293.87. But the more substantial target, 308.44. And then, if the rally continues even in October, and we get a lot of this stuff partaking, 332 to 338. So that's what I have for Netflix. Your wife lived in Schaumburg. Okay, I don't get out to Schaumburg very often. That's a little west of me. I'm right by the lake. Sausage and mushroom, little extra sauce too. Oh, sounds good. Sounds good. It would be up to 2 days following the release of Tesla's 10Q with the SEC for Elon selling. Thank you for that. Just wanted to verify I wasn't insane. And there's been no 10Q. I have not seen a 10Q drop. I'm not Oh, actually, since I have been, here's a good point. For all you Lose fans, they do an all sausage crust, because the last 2 pizzas I've gotten them, I've had the all sausage crust, because remember, I was doing the blood glucose monitoring and more of a keto thing to judge blood sugar, and regular crust spikes blood sugar. Because again, I'm doing technical analysis on my body. So the last 2 I've had would be a Lou Malnati crustless pizza, which actually the crust is made out of sausage. The whole thing's made out of pressed sausage. And then it's topped with, and I got pepperoni and onion. It is actually a very good option if you're avoiding crust. It is quite tasty. Bank of Japan got me on Friday. I'm selling all my Yamahas and Hondas in protest. Oh boy, what kind of car? What kind of car do you? Is it a Honda that you drive? Is that a? Do you have a Honda motorcycle or a car? Where's part one? It's the part that came out before the part two. It's the part that dropped. It's not labeled part one. I labeled part two because I had to restart it. It's just a bike. Okay. Do you have any Japanese cars? Or those go getting sold too? And remember, these interventions in the long, one-sided interventions are generally not successful. Why is this one-sided? Because you don't have the U.S. trying to get a substantially weaker dollar yet. Well, there you go. Your bikes. All right. With that, let's just peek at Apple with their earnings, and then I'm going to wrap this up. I got some stuff to do. Apple, it's, yeah. Well, it did fill the 87.5 rule. I got to give it that. It did fill the 87.5 before the big reversal. Next little area, 150. There's not great patterns up here, but then again, 155, 25, and then the 200 to the upside. There's just not a yeah, this is way too sloppy to be an inverse head and shoulders. And I'm just going to peek at Amazon. Because Amazon's hit the first. Remember, this is a different story. If you already have a pattern in play, then it's a different story going into earnings. This was already a triggered double. By the way, yeah, I already hit the first target. So you got to use some modified stops. If you're taking the conservative approach, by the way, if it already hits a first target, you don't want to do the trade if you're still learning it. But for advanced traders, this is then the follow-through trigger. Retesting the first target. The next two targets, 120, 122, which is definitely key. And right above there, I would not ignore the 122 and then 123.31. So if this is already a trade that somebody was in, going into earnings, you just use it with the stops. Now, if it hits a target, at least if it hits a second target and you don't want to carry it through earnings, that's fine and dandy. Why? Because the final target is the lower probability one in this instance because it's through this move that started it. But this is your difference. When you have a trade that's already in going into earnings, it can be carried. But if you don't have something like that Microsoft that we touched on and there's no pattern, it's just like, if I don't have a pattern, there's no trade to go into to earnings. This has a trade to go into to earnings, although it could at least hit the second target before earnings. Then I would just very much downsize it. All right, with that, I'm going to wrap it up for now. By the way, if you sat around here this long, please do consider subscribing, ringing that bell, and hitting the like button. Everybody, I will be back tomorrow morning. Have a fantastic rest of your Sunday, and rest well. Bye for now.